Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about a company that helps keep medical facilities infection-free. What we're talking about today is we're talking about Steris, and I have an interesting story that I want to share with you as to how I came up with this stock to analyze today. But we'll go ahead and get into that and talk about a lot more things today on the daily stock analysis. Let's get started. Thanks for joining me today. I want to start today off and thank our first sponsor today. And our first sponsor today is Richards Financial Planning. If you're frustrated with your finances, if you like all the ideas about stocks that we talk about, but you need a little bit of help in putting things together, go over to richardsfinancialplanning.com and learn about the prosperous planning process. I think that you'll benefit from that. So let's go ahead and get into today talking about Steris. I want to share with you a little backstory on this and how I selected Steris to talk about today. And really, yesterday, I was supposed to have a stock analysis and I wasn't here. Maybe some of you missed me. I hope you did. But I had to go to the dentist. And when I was at the dentist, I thought to myself a lot of different things. As I'm lying there in the dentist chair, and I'm thinking, first off, I have to have a crown, and this crown cost $1,000. That's expensive. But then the more that the dentist did, I thought to myself, really $1,000 is a bargain for this guy to put a crown on a tooth in my mouth. Now, as I did that, I thought, how is the money being spent in this business? How are they making money? Is there a publicly traded company that has to do with this? Now, my dentist is an individual business person. He's an individual businessman. He's in business for himself, but he uses a lot of the same things that many other dentists use. So what I started to do is I took the philosophy and I took the approach that Peter Lynch used to use when he was managing the Magellan Fund. If you're not familiar with Peter Lynch, look him up. He was and is an icon of money managers. And one of the things that he was famous for doing is selecting stocks based on what he really observed around him. He might go to a mall and see what kind of clothes people are wearing, what kind of food people are eating, just by observing. But as I'm sitting there in the dentist chair and I'm thinking to myself, this dental instrument that he's putting into my mouth, I'm sure that it's been in somebody else's mouth. Now that might sound kind of gross, but the point is going to be that he had to sterilize that thing. And what process did he use? So I started to look it up a little bit more, and that's how I arrived at Steris. Steris is a company that helps hospitals, doctors, dentists, pharmaceutical companies to stay clean. Now, their business has actually, you would think that it had gone down because of the pandemic and there's not as much surgeries that are going on. But think about this. Think about the strides that dentists and hospital facilities and all those groups are taking to keep everything COVID-free, to keep it sterile so that people don't get sick, not just get sick from COVID, but get sick from all kinds of bad things that are out there. That's what Steris does. So what I want to do today is I want to take just a little bit more look at the company and walk through what they do and then help you to understand where they have the possibilities of making money or where they have the possibilities of losing money. So let's talk just a little bit more about Steris. The company in itself, really, it's a medical device sterilization company, and they help with infection prevention. They're in hospitals, they're in surgery centers, medical devices, pharmaceuticals, biotechnology. They also have an emphasis on research laboratories and, of course, dental device sterilization. The company is global, and actually up until 2015, they were based in the United States, and then they moved to Ireland. 70% of their business is based here in the States. 10% of it is based in Great Britain. And that's a story in itself about a wide moat because they have a contract with the National Healthcare Organization in Great Britain. And that's where 10% of their business lays. And 20% is elsewhere throughout the world. The stock in itself ended up the day at $189.53, up about a 0.5%, not a lot, but they did okay. Now, remember, we're going to look at this the same way that we do with everything else. We have a recipe. It's the SEC recipe. We look at the stability, the earnings, and the competitiveness of the stocks that we're talking about. Now, I always begin with the moat of a company. Remember, that moat is the superpower of a company. That's how they set themselves apart from other competitors. And I believe that Steris has a narrow moat. Let me describe it to you just a little bit. They do have proprietary assets. Now, they are going to be going through a merger with a company called Cantel. That was actually only announced, I believe, on January the 12th. Now, Cantel in itself is worth about $3 billion. They have a proprietary product that they're developing that's called Revox. It's where they have a room temperature-based sterilization process, which will be revolutionary and could really make other companies' processes more obsolete. The faster you're going to see that a company can go through the sterilization process, the more business that they're going to get. Now, the switching cost is significant because you have to put a lot of money into the sterilization processes. They actually have, it's almost like a factory, an offsite center where they do the sterilization of many of the different equipment pieces and the different tools that are utilized in surgery and in dental and from that standpoint. They also have a cost advantage. The cost advantage is because of their footprint. They have about 1/3 of the device sterilization market in the United States. And what you're going to find from the moat standpoint, why they're set apart from their competitors, it has several different aspects to it. When a hospital looks for a sterilization provider, they keep this in mind. Their operating room cost is in between $1,300 and $8,000 an hour, depending upon the hospital. Every hour that hospital room is not used, then that's money that they're using. So if they can get their equipment that is in the hospital cleaned and the devices that they're utilizing clean faster, the provider that's able to do that is going to get the business. The quickest turnaround is going to get the business. Now, as far as a competitor, remember, we're talking about stability here. Steris has contracts that are generally about 3 to 5 years. They use sterilization solutions and services as an ongoing revenue. Some of the bigger equipment may have less revenue that's associated with, or less margin, that is, but where a lot of their margins are made up is from the ongoing service that's associated with it. Because once you sign up with Steris, you're with them for 3 to 5 years, and you probably don't want to go to another competitor because of the equipment that you have. Now, how has their revenue been doing over the past years? We go back in the Wayback Machine to 2018 and see that this mid-cap company, yes, that's what it is, it's a mid-cap company, they had revenues of $2.62 billion. Now, when we go forward into 2019, that increased by about 6.1% to $2.78 billion. And in 2020, increased by 8.99% to $3.03 billion. Now, hold on to your hats, ladies and gentlemen, because I want you to look at what that did to the earnings per share. In 2019, it was $3.39. In 2019, it was $3.56, and it popped up 36% to a revenue of $4.76 per share in 2020. That's a significant increase. Now, let's draw back a little bit further and look at the earnings, because remember, when we're looking at the stability, we talked about that with the moat. Now we talk about the earnings. That's the SE part. If we look at a graph of what the earnings look like, we can go back all the way to 2015 in the graph that I've thrown up on the screen, and you can see that it's kind of stair-stepped. It's like going up a mountain in a way, and the steeper the mountain, the better, because that means that revenues are increasing, and they're increasing on a regular basis. Now, Steris actually defied what the analysts were expecting. They thought that because of the lower revenues based on less surgeries, that their business was going to be off more in 2020. They were fooled. They actually came out, as I showed you just a moment ago, they had a 36% increase in earnings per share, the diluted earnings per share. But remember, always, when we're looking at earnings or anything associated with making a profit off of any of these stocks, the past performance cannot be a guarantee of the future results. Now, here's a surprise. This is a medium-sized company, a mid-cap company, and they actually pay a dividend of 0.85%. That's significant. Now, remember, too, that's not guaranteed. But let's look and see what happened to the price of the stock over the past years. If we go back in the Wayback Machine 1 year to the 21st of 2020, it was priced at $152.41. And then today, it ended at $189.53. I did this at lunch. It was up a little bit more. So let's say that it ended the full year that I'm calculating at 24.58%. Now, stability is real important. So we want to draw this back a little bit in the Wayback Machine, and we want to look what happened 3 years in retrospect. 3 years ago in 2018, the share value was right around $89 per share, a little bit more, 89.009. And then, of course, today, ending at that 189.53, it is up over a period of 3 years, 113.32%. For a company that's kind of a dull business, that's pretty good. That's a 28.73% APR. Now, I want to talk about this just for a real quick moment about earnings and a business like this, because when we look at a business, a lot of you I know want an exciting business. You want something that's going to be tech oriented. When you look at this, you're thinking device sterilization. How exciting or boring is that? It's boring. But 28%, now that's exciting. Remember a moment ago, I talked to you about the idea of how I found this stock was by using what Peter Lynch did, and he just observed what was around him. Now, I want to read to you a real short quote from Peter Lynch, and this is actually the way that he looked at boring businesses. Hold on just a minute. I'm going to read this to you if I can, please. He said, "A great industry that's growing fast, such as computers or medical technology, attracts too much attention and has too many competitors. As a place to invest, and this is Peter Lynch talking, I'll take a lousy industry over a great industry anytime. In a lousy industry that's growing slowly, if at all, the weak will drop out and the survivors get a bigger share of the market. A company that can capture an ever-increasing share of a stagnant market is a lot better off than one that has to struggle to protect a dwindling share of an exciting market." And I don't agree 100% with what he says, because I think exciting investments are great. But I do think when you look at a company like Steris, and if you're from Steris, there's no offense meant in here, your business is a little boring, but your growth is awesome. A 28% APR, which I have to remind you, the past performance is not going to be a guarantee of what the future results are. But 28% is something to applaud. That's a really good, that's a very good return. Now let's look at what the guidance is on Steris. Now, Steris, what they're saying at the company level is that they anticipate their core market growth to be around 4 to 5%. And what the analysts are saying is this. The analysts are saying that they think that it's going to be more than that. They think that the growth is going to be around 6 to 8%. But remember this, guidance is not a guarantee. It's just a projection. But just to talk a little bit about guarantees, I want to segue into today's sponsor and real shortly just emphasize and thank our sponsor, Advice for Life Insurance. Your family needs you, and you need to protect them with life insurance. And you can find the best life insurance at the lowest price in less than 5 minutes at adviceforlifeinsurance.com. If you need life insurance, go over and visit their website. They can help you out. All right, now let's talk about what the bulls and the bears are saying about Steris. It's interesting to look at that perspective. From a bullish standpoint, there is some concern that is hyped right now about the fact that the company uses a product called ethylene oxide. And they're worried that the Biden administration is going to come in and the EPA under Biden is going to overregulate the use of ethylene oxide, and that's going to blow the market for Steris. I don't think that that's going to happen. I really think that that is overblown. And I'm going to look at it this way. Steris has a significant market, and ethylene oxide is not the only process that they can use in their sterilization of devices. Now, also a bullish sentiment on this is that the profits will increase with the demand of surgery in the near term and the long term. Now, the near term is obvious. As the pandemic wanes, more people are going to go in for surgeries, and there's going to be more devices that are going to need sterilization, so the business is going to boost. On a long-term perspective, you've got baby boomers like me that are going to need knee replacements and hip replacements, and that's going to increase. It doesn't matter whether it's universal health care or not, they're going to need a sterilization process. And that's where Steris is going to benefit. Another thing is, as we obviously have longer life expectancies as we go through time, and as we age, we are going to need more medical care, and that's going to roll back into more surgeries that are going to be needed. Now, all those are bullish aspects or bullish sentiments from the different analysts. But what are some of the bearish analysts saying? Some of those bearish analysts are saying that less invasive procedures are going to require less sterile products. In other words, if you have less cuts or less surgical instruments, you don't need as much sterilization. That's going to hurt the bottom line. That's a bearish sentiment. Another thing is this. This company, and I think this is a double-edged sword. That's why I put this in there. This company used to be based in the United States up until about 2015, and then they moved to Ireland. Did you know that Ireland has a corporate tax rate of 12.5%? And if you have revenue that's tied to patents or intellectual property, that the revenue is taxed at 6.25%? Wow, what a bonus. I think that Steris was very smart, considering that the Biden administration has already told people that they're going to raise corporate taxes. So that's good from that standpoint. But here's the bad part that some analysts are looking at. If Brexit doesn't work out for Great Britain, of which Ireland is part of, if it doesn't work out, they may have to roll back to the Eurozone. They may have to roll back to using the euro. And if they do, that's going to hurt the margins because the taxes that are in there are going to be affected. Now, I'm not a tax expert for Irish taxes or Great Britain, but that's what some of the analysts are saying. And lastly, the competition from other companies, like there's a company called Sterigenics, which is actually a part of a company called Sotera. We'll talk about that in just a minute. And also Getinge, Getinge. It's a Swiss medical manufacturer. These are all companies that are competing for the market share that Steris has. And there's not a big moat in there, so these companies could have a problem, create a problem for Steris. But those are bullish sentiments. You have to weigh whether the bullish sentiments are going to outweigh the bearish sentiments. Now, let's look at valuation. The current value, I put up here 188.85, and you know that because of the market, it closed at 189.53. I did this beginning this morning. But I go and I look at Morningstar and I look at what their analysts are saying. And this is actually a live analyst, a real person that did an analysis of this stock. And their opinion was that the fair market value of Steris is really at 165. Now that's up from, I believe it was 165 back about a month ago before the merger was announced with Cantel. And they boosted it up to 175, which puts it at the fact that the company is still trading, in their opinion, at a 7.9% premium. but it's a 3-star fund. Now, remember the star rating system, just to remind you, the star rating system for stocks is vastly different than the star rating system for mutual funds. Mutual funds has got a lot more stuff going on inside of it. The stock ratings are primarily going to be based on value. So $175 fair value, Morningstar is saying that this is premium, selling at a premium of about 7.9%. Now, what are some of the other analysts out there saying about Steris? There are very few analysts that are rating this company. In a moment, I show you that there are 5. There's only 1 that has a recent rating on this. So you have to take some of this information with a grain of salt. Out of the 5 analysts that are out there, 2 of them are saying that it's a strong buy, and 3 of them are saying that it's a hold. So it really comes out to a consensus of a moderate buy. Now, how does this compete? Before we get to the individual analysts, let's look at how it competes with other companies. Now, remember, I talked to you earlier about the fact that I came up with the idea to talk to you today about Steris when I was sitting in the dentist chair thinking of how's my $1,000 crown being divvied up and how is somebody making profits off of it. So what I did is I really didn't compare it as much to some of the companies out there like Sterigenics, although it's up here, but I pulled some of the other dental companies, the dental supply companies and the dental resource companies in here for you to see how it competes. Now, if you look at the screen and the spaghetti graph that's up in front of you, you'll see Steris listed, and it shows a year over the year. They've beat most of their competitors except for Patterson Companies. They beat most of them. Patterson Companies is a company that is a supply company for the dental industry, and they finished the year up almost 40%. Now, other different companies, now I've talked to you just a little bit about Sotera. Sotera is the company that owns Sterigenics. Sterigenics, if you looked at it as far as how much market share that Steris, the company that we're talking about, Steris has about 1/3 of the market share for the sterilization of medical devices. But the other third goes to Sterigenics. Sterigenics, as you can see, is part of Sotera. And on the spaghetti graph, you're going to see that it's a very, very small history because they only became a public company in the last, let's say, 3 or 4 months. I believe it was right at about December, maybe November, when they became a public company. They had their IPO. But you can see that their history, when you start to chart and see how much the movement is, its movement is very similar in the past 3 months to what's going on in the medical market for Steris. Now, Henry Schein is Henry Schein is another dental company, and Dentsply Sirona is another company that supplies the dental industry. Now, if you think of it this way, I want to make a suggestion to you. As you look at all these different companies, there used to be a exchange traded fund, an ETF that specialized in dental companies, but that liquidated. If you want to start your own ETF, in other words, just for you, you could have companies, you could have all of these 5 companies, and there's really only about 7 to 10 dental companies that are out there. You could start your own ETF if you want to for yourself personally and use a strategy that's called direct indexing. And go over to my website at richardsfinancialplanning.com. And if you look in the blog, there is a blog post about direct indexing. I explain to you how that works. And you can use that to start your own dental ETF if you want to. And you could divide it between the market capitalization of each of these companies and have your own company that will follow what might be a boring industry, but everybody goes to the dentist, friends. Well, I hope they do sometime. Most people go to the dentist at one point or other in their life because everybody needs some help there. All right, now let's look at actually what some of the different analysts said about this company. Remember, I told you that there were only 5 analysts that were offering opinions. Look, though, if you're looking at the screen with me and you look over to the left column where it says date, look at the most recent date. There's only one. There's only one that gave an opinion after the merger with Cantel was was suggested. Now, Cantel is a company that is a competitor. They're less in size than Steris, but there's two competitors which are going to go together to make a powerhouse of companies that are in the sterilization of device business. Now, what Robert Baird, which is an analyst, said is that they're looking for this stock to outperform, and they're picking a target in between $200 and $230. Right now, remember, they're trading at 189.53. So their opinion is they're looking for a lot more room to grow. But if we look a little bit more at some of the different analysts that are listed, most of them are a little older. JMP Securities is going to be the next most recent, and they are from October of 2020. But then you even go back and you look at Sidoti, which issued an opinion in 2018. And that's not really fair to put on this company, considering that there's a lot of things that happened recently. And Key Corp in 2019, back in May of 2019, put out a opinion that said that their opinion of the stock is 135, 138, around in that range. And we can obviously see that that was wrong so far because it's at 189.53. So keeping all that in mind, you can see that what we've talked about today is we've talked about the stability, we've talked about the earnings, and we've talked about the competitiveness. And I would give all those a thumbs up. I think that this company has a lot to bring to the table in the future. But you have to determine how it fits into your portfolio and if it fits into your portfolio, because you got to understand that stocks, there's no guarantees associated with it, but it may be something that you would like to invest in. Think of investing this way, if you would, friends. You go to work every day and you get an income. You pay your bills, and then you take a little bit of that income and you invest it. The idea is that over time, you want your investments to continue to grow so that they can pay you. Either you're giving yourself a little bit of an increase, a raise in income from your investments every year, or else you're gathering enough investments so at one point in time, it will replace your income. Keep that strategy in mind. Remember that, yeah, there are other reasons to pick investments. And really, I think there's just three. I think that you pick them for growth, just as I mentioned. You pick them for income if you need income, like through dividends in itself. Or some people pick it for recreation, and that's okay too. But if you're going to pick it for recreation, make sure that you pick a good stock that's exciting. All right, friends, that's everything I have to talk to you today about. I thank you for visiting. I've got a lot of you that have written in, and you've given me some good ideas going forward. Tomorrow, I'm going to hit on one of your choices. I was going to do that today, but today was waylaid because of the dental visit yesterday. But I hope that my dental visit paid off for you and gave you a good idea of something to invest in, another different type of stock. So please stay tuned for the disclosure. Go back and watch the video again, and you can see the different parts about the SEC, the stability, the earnings, and the competitiveness of the stock that we talked about today. Have a good evening. Thanks for coming.